Welcome to the Real Estate Entrepreneurs Podcast.
Welcome to the Real Estate Entrepreneurs Podcast. Today we have a real estate investor that specializes on multifamily and commercial. Is that correct, August?
That's right, multifamily and built to rent as well. Happy to get into that in more detail.
Built to rent. I like that because I don't think we talked about that in the podcast before. But before we get into all the real estate strategies that you do, tell me a little bit about yourself. Where are you originally from?
Yeah, my name is August Beniaz, Chief Investment Officer with CPI Capital. CPI Capital is a real estate private equity firm with its mandate to acquire multifamily and develop build-to-rent projects while partnering with both Canadian and U.S. investors, LP investors, international as well. But main focus is really Canadian and U.S. investors. My background originally from, ethnicity-wise, I'm Canadian. I'm planning to be an American. Both of my sons were born in the U.S. They're born in Florida, so they're American born and Americans. And my heritage is from Iranian background.
But were you born in Iran or in Canada?
I was actually born in India, unusually.
In India?
In India, that's right. My family was in India when I was born, and we moved to Iran when I was 4 years old, and then moved to Canada when I was 14. So,
and where are your parents from?
My parents are Iranians. Yeah, we're ethnically, nationally Iranians, but they were just my dad was there doing business. My mom was going to school.
Right.
Iran was going through a difficult time around the late 70s, early 80s. So that gone away for a bit. Just to make, hopefully things to cool down a bit before coming back to Iran.
Right. I have many friends that are from that era, right? That their parents migrated from Iran somewhere else, or Iran. How do you say it? Iran or Iran?
It's actually it's the spelling is incorrect. The spelling should be Eron. So Iran.
Iran.
As if,
okay.
Iran. That's a correct. But you hear all kinds of stuff, right? If you're extremely right leaning and very pro Israel, then it's Iran. But if you're a little bit more liberal and a little bit more educated, then it's more like Iran. But Iran is actually the correct way of saying it. This correct spelling should have been Eron.
Eron. So Iran. Okay. I've met a lot of guys. I don't think I've met many women from Iran, but a lot of guys, and it's fascinating to see that most of those people that came over from Iran in the late 70s and early 80s, man, they found success, so one thing that I can define those individuals that I know, and I can think of about three or four of them, including you, right, is that they came over and they took advantage of the opportunities that this system allows them, and they crushed it. They killed it. Like I remember one of them that he's got I don't know how many minivans running around Houston with door-to-door dry cleaning and stuff like that. He's a multimillionaire, and he made a lot of money in a very short period of time too with that business model in the early 90s, and he was just in his early 20s. You know what I mean? Like he wasn't seasoned enough to have a lot of life experiences and things of that nature. And then I met about three or four other guys that also are probably contemporary with us. They're in their late 40s, early 50s, and they all came from that particular era. And they're all successful in what they do. Why do you think that is, August?
Yeah, no, when you look at Iran, and Iran was a monarchy until 79 when the revolution took place and it became a republic, an Islamic republic. So it's an unusual one. But there was these waves of Iranians leaving Iran. So the first wave, as my mom and my late grandfather used to tell me, my grandfather was in real estate and he did a lot of business with a lot of Iranian Jews. And a lot of times when, especially with the conflicts and the tension that exists between Iran and Israel, it seems like a paradoxical statement to say Iranian Jew, but there are a lot of Iranian Jews. Currently, today, there are the country that has most Jews in the Middle East outside of Israel is Iran.
Wow.
There's 25,000 Jews living in Iran. They have a member of parliament and so on. There's synagogues in Iran, but obviously there's mass tensions as well between Iran and Israel and what have you. But so the first wave, this my grandfather and my mom were telling me, was the Iranian Jews started leaving Iran in mid 70s. This was well before any serious knowledge of a revolution taking place, because there was uprisings in Iran. There was revolutions prior to that date where they didn't really materialize. It wasn't it was more of an uprising. So 1953 with Mossadegh, where the democratically elected prime minister of Iran was overthrown by CIA and MI6 in Operation Ajax. So, and the Shah was brought back in Iran. So Iranian people, when they saw uprisings, they didn't translate that to a full-on revolution, but the Jewish Iranians did. So the first wave was the Jewish Iranians leaving Iran, and they moved to California. So in Southern California, there are over 500,000 Persians that live in Southern California. Not all of them Jewish, but that was the first major wave that came to the U.S. And they were highly educated. They were highly sophisticated. They were business owners, so that sold.
They probably came from money, right?
They came from money and highly educated, because the Jewish religion and tribe puts a lot of weight on education. So they were highly educated. The next wave was the monarchists. So they were. It was right around the revolution, or pre-revolution, or maybe right around post-revolution. So there were a lot of people that worked within the apparatus of the monarchy, and including the Shah himself. So a lot of them left Iran and moved to the U.S. as well. Again, that's the intelligentsia. That's the people owning corporations, the people owning the industries. So they left Iran. For example, today the CEO of Uber is as an Iranian Khosrow Shahi, whose family left Iran. I think he's Baha'i. So they left Iran around the revolution time, and now their family has done tremendously well in the West. So and then you had others, including my father, or other groups. The other wave that really came was post-revolution. People had they got to that certain age in Iran, and they felt that the regime in Iran and the 8-year war with Iraq had done so much destruction, and that the mullahs were running Iran to the ground, and hyperinflation in Iran, and so many other issues, and civil liberties didn't really exist. And that was the next wave of Iranians leaving, again, highly educated. So there's been a brain drain happening in Iran over time. But culturally, Iran has, even pre-revolution and post-revolution, Iran has always been a capitalist structure. It's Shah's biggest fight was with the Marxist. His biggest concern was the Soviet Union and the north of Iran, border with Iran, would take over Iran. So his biggest concern and fight was with the Marxists, thinking that Iran was going to become a communist regime and give access to the Persian Gulf to the Soviets. So, but then the Islamists hijacked the religion. It's a very interesting background. So I just wanted to make the point that, Iran has always been a capitalist type of, let the business owners do well, and it will trickle down to the common person and what have you. So it's always been a dog-eat-dog type of civil and economic situation where people had to survive. So when you come from that background, not only you have the best and the brightest leaving the country, but also people who might not be highly educated or wealthy, they have that instinct to want to succeed in business and do well, and have that drive and that enthusiasm to win in business.
Amazing. And so, all right, so let's take you back to Canada now. You're 14 years old. You live in Canada. You're going to high school there. What's the sort of like the culture difference for you? Like, you're coming from Iran and now you're in Canada, a whole different country with a whole different set of values. What did that look like?
Absolute culture shock. And, additionally, I was just going through puberty when I came to Canada, and it's a terrible age for immigration because, one of the things I've learned about accents is that if you learn a language pre-puberty, you will not have an accent. If you learn it post-puberty, you will most probably have an accent. My case was right at puberty, so my accent is kind of an unusual. It's not your classic Iranian English type of accent,
It's like me. I'm the
but
same way. I learned it through puberty English, right? So I grew up speaking Spanish, and then they spoke English in my house like my parents did, but their English wasn't perfect. So, and the only reason they spoke is so I wouldn't know what they were talking about, right? And then I have an accent, but I was born here, and I literally learned English while I was growing up, so I can relate to what you're saying. But your English is pretty
yeah.
good, though.
Yeah, English is decent. I mean, I'm playing catch up, right? I learned it at 14 years old, so trying to, update my English on daily basis. I have the dictionary app on my phone, and I look at the daily word, and I try to bring in new words. And I've got to learn about my space as well, commercial real estate. But yeah, going back to 14 years old, culture shock, coming to a new country. We were, I would say, upper middle class in Iran. It's Iran. These more developing countries, and I'm sure visiting Venezuela lots yourself, you understand that there isn't just middle class, the wealthy, and the workforce. That's in more modern, more Western countries. Those are the three main classes you have. In developing countries, you have many classes. You have, if you're upper middle class, there's probably 15 classes below you that live there, right? So we were upper middle class, and relatively speaking, that meant a lot. We were very wealthy in Iran, multiple cars. My parents owned their own property, and they owned other properties as well. We right in the middle of Tehran, we owned a low-rise type of place, like so we lived in the bottom unit, which was a duplex style up and down unit, and then we rented out the above floors. And my parents were doing very well. But when we moved to Canada, we became we were no longer upper middle class. So it was very difficult for my dad. And that was really, we moved here in mid 90s. So it was very difficult. The economy wasn't doing well in Canada. A lot of people that had moved here from Hong Kong and China, mainly from Hong Kong, that were going back to Hong Kong. So the economy wasn't doing well, and he had a very hard time getting a job. So that was hard on me, hard on the family. My parents ended up getting a divorce soon after moving to Canada, and it seems to be a common thing with Iranians moving to the West. There, the parents end up getting a divorce, not all the time, but it's very common. So it was very difficult, coming to a new country, your parents getting a divorce, trying to make it. So after high school, I really got into high school jobs, and I tried to go to college for a while, but I had to focus on trying to make money with different construction jobs. So I did a year in college, really, and got into real estate soon after that. Maybe I'll stop there before keep going.
No, that's good. So you got into that. I love it. So your transition, you started in real estate very young.
I got started in real estate very young. Yeah, so I was in construction, working different construction related jobs on site at a brake manufacturer here in Vancouver. I worked there for a couple of years as well. So I gained a lot of knowledge. But then I got into real estate as a broker when I was 23 years old. So my mom told me that, hey, listen, why don't you try this real estate thing? You get a license. It's a pretty easy license to get, and all you got to do is people come to you. You list their houses on MLS. The house sells, and you get a great commission. I'm like, oh, that sounds pretty easy enough. So when I got my license and tried to, be in that space, soon realized that wasn't the case. It's an extremely competitive business. Only top 1% really survive in real estate on the brokerage side. But what I noticed in real estate as a broker for the short time I was there is that the wealthiest and the most successful real estate agents weren't the real estate agents who had a big team or big group. There were real estate agents who were themselves involved in active side of real estate investing, either developing or doing fix and flips or being involved in the business that they brokered themselves. So that was kind of the impetus, the drive for me to want to be involved more on the development and construction side. And I got right into purchasing my first fix and flip for $200,000. That's nearly.
Where is this? What city?
It's a outskirts city outside of Vancouver, an hour outside of Vancouver, called Abbotsford. I remember buying that house for less. It was just under $200,000. We bought it. I was gonna go hire a general contractor to come and do all the renovations for me, but the price they gave me was mind blowing. So I just asked my mom, like, "Hey, you have any friends that do painting or drywall?" She had a couple of friends, husbands that did that. So it was very grassroots. It was very elementary, really, how I got into construction, but really grew from there, started my own general contracting. So my focus went completely on to fix and flips rather than being a broker, and started growing that business. I eventually got into actually building custom and spec homes. And at that time,
hold on. We're going too fast. Let's go talk about
Sure.
that first property you got for 200 grand. Tell me the whole thing about it, because this is the deal, right? A lot of our listeners or people that are watching this podcast, they may just be going to get their first one, right? So, and of course, we get the people that have done hundreds of them, and they're looking for what's next for them, right? Which I'm pretty sure you're gonna get into in the next other podcast. But that first deal, you paid 200 grand. How do you do that? Do you pay with your own money? Did you borrow the money? How was the deal structured?
I partnered with a real estate agent from my office that I'd become close friends with, and him and I jointly put down the down payment. I think it was a nominal 10% with some closing costs, so it wasn't much. Well, we also needed some renovation costs, but I have to caveat our growth in this stage with the fact that Vancouver was going through an unbelievable growth, right? Over that 20 years period until just a few years ago, Vancouver real estate prices had grown 8% compounded year over year. So there was a huge rush. We had the Olympics here in 2010. We had huge amounts of immigrants coming from China. China was doing economically really well. So a lot of Chinese were coming to Vancouver, similar to California as well. So real estate prices really, over the last 20 years, 25 years in Vancouver, real estate prices have 500% increase in real estate values over the last 25 years in Vancouver. So there was a wave, and we rode that wave. So yeah, 200,000, we bought it. I remember a general contractor came in and told us $80,000 to do the renovations we needed. And we ended up doing everything ourselves, just hiring, not ourselves, but hiring doing the managing ourselves, hiring contractors to come and do what we needed: flooring,
Yeah,
drywall,
hiring the
paint.
labor directly.
Hiring the labor, exactly. Hiring the labor, and we ended up selling that property close to. I think we ended up spending around $25,000 to $30,000 in renovations, and we sold it close to $300,000. Now, some of that was the market itself gaining, increasing in price. It was organic growth. It wasn't as if we did a renovation as all because of the renovation we did, and we continued that. We did a few other projects after that, fix and flips, but I saw the need that existed in single family development, in home building, because a lot of Chinese were coming, and the first thing they would do is buy a couple cars, brand new nice cars, and they would buy a brand new house. So we ended up getting into the business of building single family, more on the luxury side. So we're talking about at least, close to almost $1 million in construction cost alone, the homes we were building. And the business really grew from there. But I can keep going.
Yeah, absolutely. I love it.
Yeah. No, yeah. The business kept growing there. I built a bunch of homes with that partner. We ended up splitting up. I still keep in touch with him. He's still a friend. And I started my own home building company, White Rhino Developments. And I was building both custom and spec homes. Custom is when you build a home for a client, they hire you as a builder, and you build a home that they want. And then spec is a home that you build yourself or with investors to try to sell it to the market and try to make profit. So I was doing both. Always wanted to scale, and when I was looking around my own industry and my own space, and others in my space, I realized I didn't want to be a home builder forever. I wanted to do bigger projects, build high rises and bigger townhome projects, something big, be a big developer. But when I saw my peers, I noticed that, particularly Vancouver has a big immigration population. I noticed that a lot of Italians had done well here over the years doing development. I noticed that it takes multi-generations for a home builder to end up building high rises, that the velocity was really slow for that growth that existed. So I really wanted to expedite the process, and wanted to learn more about how to achieve that. While I was thinking about those ideas, a deal came across my desk. It was a land assembly. Land assembly, what we call it here in the real estate lexicon here in Vancouver, is when you buy already existing single family homes on in a row in a arterial road where the city hall is allowing you to now create more density and build townhomes or low rises. So there was a fellow who had put these 5 single family home lots, and there were still people living there, some of them owners, some of them tenants, and he had put it under contract for 8.7 million, five homes, and he had put in a deposit. His deposit was hard. He had 3 months to come up with his second set of deposit. It was another $250,000 that he had to come up with, but he had come to some financial hard times and couldn't complete on that contract, and he was going to lose his own deposit. So he brought the deal to me, but we were making money on the buy. The project was worth more than what he had put it under contract. So I agreed to take over the contract without having the available funds to purchase the whole project. I had the first deposit maybe, but not the whole funds to complete a project. So I took over the contract, and went to some business people that I'd worked with in the past, real estate agents, other builders and contractors, and I was able to bring a group together to purchase this project and come up with the nearly $5 million that was needed to buy the lands and then to build 20 townhomes. So that was my first experience when it came to this idea of what we call today. That was really a joint venture. I wouldn't really call it a syndication, but it was my first experience when it came to bringing deals together. And I didn't understand how a GPLP structure works, how syndication worked, how funds worked. So for that deal, we just put together a corporation, and a corporation had shareholder agreements, which is the constitution of the corporation. And within those shareholder agreements, we wrote in that for August, finding this deal, bringing it on, and investing in the deal as well, and sitting on the board and advising through the whole project, he would get a piece of the upside. And I really fell in love with that model, because as a builder, as a real estate agent, you're not really performance-based. You're getting a fee no matter what happens with the project. But you can call it a general partner or a deal structuring person, you were getting a piece of the upside. So it is very much performance-based. So I fell in love with that model, and went down this rabbit hole to find out what this business is. How does it work? This idea of raising money and putting deals together. Started reading a lot of books about private equity, which was a space of
all right, but
raising
hold on
money.
a second before we get into those books.
Sure.
Tell me about those 20 townhomes. How did that whole project go?
The project is done. The project is still under construction. Is nearly complete. Keep in mind
so you're
that
in it
Vancouver,
right now.
I'm in it right now. Keep in mind that in Vancouver, it takes a long time when it goes to rezoning and entitlement, that process, particularly when it comes, even though in the official community plan, the city hall allows for the rezoning to take place, there is still a process of going in front of the zoning department. You have to go through this, changing the zone from single family to multifamily. You have to go through, be in front of the city officials and make your case, and you have to do public hearings for members of the public to come and say if you're okay with it.
How long have you and your team and your investors been on that project together now?
So there are no actual passive investors, LP partners. Everybody is a general partner.
Yeah.
So it's a joint, it's a partnership, it's a joint venture, I call it. And we've been in it now since 2020. So it's been 5 years.
Okay. And
yeah, so most of the units are so pre-sold already.
Okay.
So we have 3 units left to be sold. The project's called Onward. One word, Onward. It's in Richmond, British Columbia.
All right.
And yeah, we've done, even though having such a debt on the deal for 5 years was erosive to our returns on the deal, but still the deal is still doing great economically. Again, we bought it at a great price, and the market did go up for a while there.
Right.
So yeah.
And when do you expect to deliver those properties?
Well, I would say we're 80% complete now. The townhomes are. So the first tranche should be, the first set of the townhomes should be delivered probably in the next 3 months, I would say.
Okay, good. So, all right. So that's going from houses to building townhomes, and in a complicated area, right? Like Vancouver. It's
one
almost
quick point. one quick point. When I was building single family homes, I was the builder. I was licensed to be the builder. I was the general contractor. I would bring in trades and suppliers to build the project myself. It
Right.
was my warranty. When we build this project, you needed a different license to build townhomes.
Yeah.
So the partnership hired a GC to come on and support. Just wanted to make that
That's
clarity
even
there.
yeah, that keeps you more as an investor and as the leader of the partnership than you doing the work itself, because now you got extra pressure when that happens, right? Like, how come we haven't done this, or how come we haven't done? And 5 years is a very long time, and a lot of people can get desperate during those times, right? So, investors wise is all I'm saying. Especially if you have people buying those properties already, they're expecting, they have a timeline that they want to move out and move in and things like that. But that's just part of real
Especially when
estate.
there's no cash flow. Especially there's no
Yeah,
cash
yeah,
flow
it's
in
just taking
development
money
field, right?
away
That's
from you.
investors are gonna.
You just
Yes.
taking money away from you. I can relate. I know exactly what that looks like. So,
Yes.
I had a bunch of projects in 2017 that I ended up cleaning my plate somewhere around 2021, and for 4 years it was just money out of my pockets and very little coming in. So, it's tough to push projects like that. But on the new construction, especially in cities like that, it happens because there's so much red tape that you have to undo in order for them and the problem is none of those people are investors, so they don't really understand your pains, and they're just a city employee collecting a paycheck with power, because that's another
I'll
one
give you
that,
a point. I'll give you a point here. So while I was a home builder for many years, there was somebody that worked at the city that also did drawings. He was architectural drawings, and he was great. His work was great, but he also worked at a city, and he drafted my drawings in less than a week, which I was shocked. This is a sophisticated luxury home. It's a $4 million home I was building,
right.
and I went to him. I'm like, why does it take you less than a week to draft such drawings? And at the city, it takes you months to approve a drawing that's already been approved. And he said that if I do my work fast at a city, I'll be fired in a day, because everybody else that works at the city, if you do it faster than others, that's not something they want. They want the sluggish kind of the long, this really paper pushers, the bureaucracy that exists there. It doesn't really allow top talent to do their work faster. It actually slows them down and forces them to complete projects much slower than they're able to be completed. So important
that
point to
that
take.
happened to us here on in Houston, in a little town. We bought this property that used to be a house at some point, then it was a church, and it's a small house, 2,000 square feet. Then it was like a burial, one of those cremation places, or I mean, it was always tied into some sort of people either getting married or dying for some reason. So we bought this, and we were going to turn it into our office. When we went to the city to pull permits, the city, the engineer, she told us that we needed to demo the property, that we couldn't, like, that we had to demo it and start from scratch. And I was like, why? We just want to use the shell. We want to put it up, bring it all up to code. We don't need to rebuild. And brother, she held us to that for years. Like, we couldn't touch it. And then we said, you know what? We're not gonna do anything with it. Just let it sit there. And it wasn't until she was removed from that, and I think she had some personal interest on that property, because we will get all these random offers and weird calls about it, and we're like, yeah, they're trying, for some reason they want us to sell this property. And we just had to wait until she was done with and that we happened for years. And then for some reason, when we were gonna go work on it, it burned down. So go figure.
Oh wow,
Yeah.
wow,
So
yeah,
yeah, and now it's just an empty lot. So that's
yeah,
thanks to a city official. Now, not all the cities are like that. There are cities
yeah, yeah.
where things are more expedited, and like the city of Houston, they just want you to pull permits and do things the right way. But what happens is there's so much activity that it takes them a while to go through all the paperwork, right? So, all right, so let's go into the the GP, LP, your capital are raising for all these large deals that you guys are doing. What is it that you guys focus on?
Yeah, so at that juncture of my career, I felt that I no longer wanted to build single family homes, and I made that decision internally. And I wanted to be involved in syndicating deals and raising money to build. My goal was really to build high rises, bigger, large development projects here in Vancouver, and copy the same model that I copied with the Onwards project. And so, not building homes, it gave me a lot of time to learn more about the industry I was trying to get into. At that time, the only other industry that I understood raised funds and did projects was private equity. So when I went down to understand more about what private equity was, I read a bunch of books, Barbarians at the Great Gate, King of Capital, really talking about the creation and the growth of Blackstone. Private equity is mainly raising funds from institutions to buy companies, either take them public or take them off the stock market through mergers and acquisitions and leverage buyouts. So I learned about the industry to that process, but also understood that I'm not planning to buy companies, I'm planning to buy real estate. Interestingly enough, Blackstone today has a larger allocation to real estate that they do to private equity buying companies. So that's interesting what has happened in their trajectory. But as I was gaining more knowledge about the space I wanted to be into, I heard about this term called syndication. Prior to that date, being in real estate for 15 years at that time, I'd never heard the term syndication. So it was very interesting for me. I started searching it more, and I started getting a lot of information online on YouTube, on podcasts, a lot of books. So I started reading and getting a lot of knowledge. But a light that got turned on in my mind was the deals that U.S. groups were doing. So most groups doing syndications were buying apartment communities in the U.S. in the Sunbelt state. They were doing small renovations, some minor updates, and they were able to double their investors' money in a short period of time. So now my personal view and thesis about becoming a developer in a city that was difficult to go through the rezoning process, the entitlement process, and speculating, almost hoping where the market is going to be in 5 or 6 years when you're done construction, having gone through what I went through in our development project. Looking at these U.S. deals really made a lot of sense. And this was back in 2018, 2019. So the market was on a bull run in the U.S. starting post GFC from 2011 when it was the bottom of the market. Because most people don't know that the GFC took place in 2008, but bottom of the market didn't come till 2011. That was the first time that prices started increasing. So from 2011 to 2019, the real estate market in the U.S. went on a bull run, multifamily, others. So when I was looking at these other groups, I'm like, hey, this makes a lot more sense. And the project is not only these groups are able to put a somewhat high leverage, 70-30 LTV on these deals, they're cash flowing day one. In Vancouver or most places in Canada, you're not cash flowing. The cap rates are compressed. If you put 70-30 LTV on your loan to value loan on your multifamily deal, you're in negative cash flow. So as an investor, just putting my investor hat on, I would rather invest in a multifamily value add deal and have my equity doubled in 5 years than to invest in some development deal that I'm hoping to, make some money in the future. So that was really the start for me looking at the US. We also looked across Canada to see how many other groups offered these types of investments. Do Canadians have exposure to US multifamily through the syndicated model? And I noticed that there wasn't many firms doing this. Now, Canadians could have exposure to US real estate through public REITs, but again, the yield there is very low. So, and then the companies that had done these syndication models had done tremendously well in such a short period of time. I said, that's the business we want to be in. I ended up partnering with a couple of great partners and co-founding CPI in 2020. And the mandate initially was multifamily, buying multifamily deals in the Sunbelt state, and bringing these deals to Canadian investors. Our firm CPI really stands, the acronym stands for Canadian Passive Investing.
Okay.
So it was meant to be a firm that allowed Canadians to have exposure to U.S. real estate. We soon realized there was a lot of U.S. investors investing with us, that the U.S., the investor market was much larger in the U.S. than it was in Canada. So we changed Canadian Passive Investing to CPI Capital. But we went through a really difficult time. Initially, internally we didn't have the infrastructure for acquisitions, for asset management, not for marketing and investor relations. Yeah, we did. I personally knew a lot of investors, my partners. We had built a great brand around ourselves and the company. So, and we had a monopoly in the space as well, being able to bring these deals to Canadian investors. So, our investor on the equity side, on the equity front, we were doing well, but a lot of people wanting to get in the space, they don't realize that multifamily investing, any type of real estate investing, any type of venture really has three main arms, right? One is the deal itself, finding the deal, making sure the deal makes sense, underwriting the deal, the analysis that goes into it. So we call that acquisitions. And then you have asset management, making sure that the business plan that you have is executed. So that's really, called asset management, getting the business plan going and completing the project, be it a company, a business, a development, a value add deal. And then the last part is the capital that's needed, both debt and equity. So those are the three main arms of a company that is, particularly in the real estate space. So we didn't have the internal infrastructure for acquisitions and asset management because it is somewhat sophisticated. So initially we started partnering with other groups. Who had a track record saying, hey, listen, we'll bring on the equity that's, portion of the equity that's needed for the project. And, let's partner up and do deals. So that's what we did. We partnered with a couple of different groups. We learned lots in that space, in that tenor that we were with partnering with other groups. We did a deal in Orlando, Florida, multifamily deal. We did a deal in Charleston, South Carolina. We did a deal in Houston, Texas, that we still own to today. But at some point, that wasn't really the company's vision. The idea was to be a full functioning real estate investment firm. So we brought on another partner, a fellow by the name of Paul Hopkins, who oversees both our asset management and acquisitions divisions. And then he's got people that work, directors that work with him as well. So we went on a quest of finding deals. So we closed on our first deal as CPI, as the lead sponsor, in 2024, last year in June. And we bought a deal in Tampa Bay. Tampa is one of our focus markets in Florida, and the other is San Antonio in Texas. And since then, again, it's been somewhat difficult to make deals pencil. There's been a bid-ask spread between what the sellers are expecting for their properties and what the buyers are willing to pay, keeping in mind that after COVID, there was so much money printed, and it resulted in inflation. Inflation almost went up to 9% in the U.S. So the Fed really has only a few levers to pull, and one of those levers is increasing the Fed's funds rate, which results in interest rates going up. So they increased the Fed's funds rate by 500 basis points, which was a shock to the system. And a lot of groups who got comfortable putting bridge debt on their deals, on their multifamily value add deals, found themselves in trouble.